Hey guys, I'm just gonna do a quick video on how we found a short pattern right in here. This is the Cypher pattern. This is one of the patterns, one of the very few patterns you can use both ways. And this had a bearish pattern in here, but we really just caught the short side on this one and then kind of wrote it down with two targets and then looking to flip this back long. Um, this isn't something that I would recommend using unless you really start to get used to how harmonic patterns work. But I'm just going to go over quickly what exactly we were looking at here and how we found this way before it would happen. Okay. The first thing I want to show you what we're looking for is XA moves. So when we're talking about XA moves, we're talking about a strong drive, an obvious drive, especially after a downtrend break. This is very helpful in noticing this type of move. Okay, so once we see this type of move, what we're looking for, and I'm going to show you a tool that we use, and we use it primarily to find most of our setups, not all of them, but a very good portion of them, and it's the trend-based fib extension. Okay, and you want to make sure this is very, very, very direct and very close to the very low, to the very high, and back to the very low where the start was. So this is your XA drive, and you want to measure from X to A and back to X. Okay. Now, one thing that we look for in this drive is an institutional type pattern to get short in here. You can do two different things. If you see a wick rejection, remember wicks mean rejection of price. So anytime we have a rejection of price, we know institutional traders are going to look to get short inside of this window. We call this box a window. Okay. And I'm going to show you how we use this primarily to get short, and then we know where to take profit and get back long. And that's the best thing about harmonic patterns. There's a lot of people that don't believe in them, and there's a lot of stuff that's taught about harmonic patterns that is absolutely a lie. And I'm going to show you something just really quick, how to understand in this window if you can use this. We either look left to find a structure, right? You can notice this structure right here. This would be a supply and demand structure, okay? So this was a demand zone and it flipped into a supply zones, right? This is where the buyer came from here. Once it breaks down and comes back above, it turns into a supply zone, right? And supply zones are reused. So if you line this up directly with here, you'll notice exactly where the price stopped here. Now, I don't always take this pattern short. There's a lot of guys in my particular trade room that do and love to do this. I don't use this that often. This particular time, I did use it because I knew that Tesla moved too far, too fast. And what I mean by that is if you use the fixed volume range profile, you'll know that this was a very thin area, right? When you get very thin areas with not a lot of orders, it's easy for the price to retrace. Where do we know it's going to retrace to? First, it's going to retrace to the point of control, right? Your POC is the largest bar here, right? This is buying, this is selling, this is where the most of the trades took place. This acts like a magnet. So once this short pattern works, you know that price is going to at least come to here. But you'll see once I post the play below this exactly how we found this particular trade and way in advance. So I'm just going to show you quickly how the Cypher pattern works. So this is your XA drive. It needs to pull back to at least 3.2 on this drive. I do not use any of these. I measure everything by hand, or I can see them with actually out using the tools, right? And I'll show you a good way to practice that when we get over with this. Um, so a good way to review harmonic patterns, right? So if you're trying to see if you could see this, what it looked like beforehand, again, when we get long down in here, we know that a good chance to take profit is going to be the top of the pattern and then into the 1.272 or the 414 window. And then we're looking to flip it back short up in this window. Okay, so I'm going to show you real quick. If you just use replay mode and play this, 3 times X is a little too fast. You'll notice that's where I posted this play short. Let me just stop it right here. And I'm going to show you why. If you go down into a low time frame, this is an institutional pattern. Okay. When you have an uptrend break, right, with a double top, a lower low double top, This is your neckline, right? Your neckline. It broke below the neckline. It broke below the neckline again, and then it pops back up into the into the 618 retracement. And I'll show you that. I'm going to pull this stuff off of here because we don't need to see that. You guys already saw that. And you're just drawing from the very high to the very low. And then you're looking at the 618 extension. All right. And then we're looking for particular price action in here. And we have our price action. When you get this inside bar right at the 618 extension, we already know we're going to get short. I happen to know to get short up in here because when you see this particular price action, it was in the 4 hour where you see this pin bar gets rejected off this the 414 extension, but then when you look left and you see this important pin bar, right? This important wick. Wick means rejection of price. This was not done by retail, right? We know that this demand zone turns now into supply zone. I went over that already. I like to just repeat things to try to explain stuff because it really will burn it into your memory. A lot of people will say that's annoying. You said it multiple times. All the guys that I've taught and that understand my system, and there's many of them, they know that if I repeat stuff a lot, that it burns it into their memory, right? Because you want all these patterns to be procedural memory. You want to know as soon as you see this stuff, that you know exactly what to do. And I'm going to show you, so we'll already see that this is the point of control. We're always trying to line up the point of control, right, to very important fib levels. Our important fib levels for take profit purposes only are 382, 618 is for the most popular. This is the golden ratio, is the most important fib level that any trader will use, right, is this 618 extension. I'm sorry, this Fib18 Fibonacci retracement. Again, remember, extensions are when you're measuring outside of the XA move, and retracements are, remember, when you're measuring inside, right? This is your first XA move, and then we measure the whole entire move. This is the actual XA move. So, for harmonic purposes, remember, it's X, A, B, C, and then D. So once we go short here, there's only two things that we know. When it hits right here, you take half of your position off, or at minimum move your stop loss to entry, right? And we know once it gets to here, I can't even see where I picked that from, sorry. Once it gets to here, we know we can either think about flipping this, at least taking off a good portion of our short position, and start to consider with price action if we want to take this long. Now, this is such a clean pattern. I had a very good feeling that this would at least touch 786. So I'm going to show you really quick how this works. Remember, we trade this pattern every single day in every single time frame, 5 minute, all the time, 3 minute, 1 hour, 15 minute, daily, weekly, doesn't matter. We trade this pattern in every single thing that we trade in all different time frames. This is probably our number one pattern that we use out of everything. We use it long, we use it short. This is the best pattern to learn for harmonics, and I'm just going to watch. You can watch this play out. All right. So, you can look at all in the plays exactly what I said. You take half off here, or move stop loss to even. I think I just moved my stop loss to even. I took a little bit off here. So let's stop it right now. Now, a couple things to note. You get to take off some of your position here. Remember, worst case scenario, you don't take any off. 6% move, 12.5 points, but you at least move your stop loss to entry. You have a free trade. Again, what you really want to do is we're not guaranteeing, but we have a very good feeling that this is going to touch at least 618. All right. So that was the first move down, and again, the last move down was all the way to the 786 extension. All right. Now, one thing I want you to note at this level is two things. What's very important, a lot of traders this is very easy to see. Any retail trader can note that the buyer came from here, right? You have your inside bar, you have your gap level. Now, most retail traders is going to be looking for this gap to be filled. And even a lot of really good traders in general are just going to consider, I don't know why that's doing that this gap is going to get filled. But you have to understand, a lot of traders don't know how to use this harmonic pattern, right? And we look for particular price action in this zone. And this is the price action that one of the price actions we look for. There's about 3 to 4 things, 5 things roughly that we look for. And this is one of them. One is an inverted hammer, all right, because a lot of retail traders will look at this and they'll consider that this is a very bearish candle pattern, okay? It is not actually bearish when you're finding it at a very cheap price. It's cheap relative to where the high was put in, okay? Because you got to remember, when you have an XA move that is like this move down here is 78% off. So when you're buying something that's 78% off, almost 80% off, it is now becoming a cheap price, okay? We're not talking about evaluations. We're not talking about anything about EPS rating, nothing at all. We're just talking about patterns. Remember, we don't trade anything but patterns, okay? We will trade stocks, we'll trade equities, equities, we'll trade futures, we'll trade oil, gold, silver, doesn't matter what it is, ETFs. We trade patterns. We trade patterns that we trade, and we trade actually procedurally. We need to know exactly what these are, when they're happening, and we need to be able to see these on a 1 minute time frame. Okay, so one thing to consider right now on Tesla, we have a big bearish inverted hammer. This is actually bullish now because it's in a very cheap price zone, and we want to consider if this can hold inside of this price zone and we get a break above this zone. You can do two different things. You can go long with a stop against this. You could go long with a stop length, a point against this. If it breaks above this level, you could add to your position. This is an inside bar play. Many institutional traders and professional traders use this inside bar play. Even a lot of retail traders use this, and that's just a bar getting stuck inside of this bar. Again, you usually want to see a really big prominent candle to have this bar inside of this one, okay? Which it doesn't happen in this one, but it's still an inside bar. It's still inside of a inverted hammer. Now, one thing you would want to look at for is if this breaks below here, you have to be very careful if volume starts to come in and it starts to move way lower. But another thing you can look for is if you get a break lower, right, volume comes in and it quickly reverses back inside of this zone. And then it's going to be even more so bearish. Because again, traders that know this type of play are always going to be looking for this gap fill, right? And you're always going to have professional traders that know this type of pattern that are going to try to get long against the X move, right? Because then their top stop loss is super tight. Anytime you have a very low risk to reward, you're going to have traders that are going to take a shot against this level, right? And you're going to have traders that are going to take a shot at this gap fill, right? But there's a very good chance, and this is indices kind of depending on what indices do tomorrow. This really depends on what can happen here. But if this opens up and breaks above this level, this is a very important bullish setup, right? And again, the patterns are all the same. The take profits are all the same, and all the patterns that I know procedurally. We trade about 5 patterns. All of our take profits and stop losses are calculated. There's no guessing. We use the same stuff, like I said, in every time frame. We don't go outside of our patterns, right? We trade all of the same stuff. I'm going to show you exactly what we're looking for here. We trade from the very high to the very low where 786 is. And then our first TP now is 382 again. It's 618. And then lastly, it's the top of the pattern. Okay. And our rules for taking profit are always the same. You have a choice to either move your stop loss and not take anything off of 382. And we're always aiming for 382, 618, and then top of the pattern. Okay. There's a certain thing we look for in a pullback to know if we're on the right side of institutional trading, right? Institutional traders and professional traders are the ones that use these patterns primarily. I'm not talking about the other harmonics that a lot of people use. These are the ones a lot of the algorithms use and a lot of professional traders use, okay? And we look for a few different things on this. We look for particular pullback levels, and it's really just putting in a new XA drive, and we're looking for a pullback to 618. And if it goes to 618, if it goes from 382 to 618, we're still looking for a pullback and bullish price action off this 618 level, right? And if it only goes to 382 and pulls back, guess what we're looking for? All right. And there's always a plan B scenario. and that would be a butterfly pattern. I'm not going to get into that one. That'll be on a later video. But we're always looking for this type of play, right? We're looking for low risk opportunities to get really high risk. I'm sorry, high reward plays. So we want low stop losses, small stop losses for big rewards, right? If we can get into 382, 618, top of the pattern, we're making a lot of money. We collected $20 premium on the downside, right? And now we're trying to collect the premium on the upside, right? Because we always want to get in here. Watching 180 calls on this type of play, I didn't get into this today. I I I really want to look for a break above this or a very close stop loss against here. But this type of play, if you can get in this thing and get long on Tesla and it starts moving higher, you have a very high likelihood that it's going to come up into 382, 618, and then lastly, top of the pattern, right? And we always use a very calculated way to take profit off. All my guys that are in my room know this pattern like the back of their hand. Like I said, we use this in every single time frame. We use it nonstop every single day, multiple times throughout the day. And that's kind of really probably our favorite pattern out of all the ones we use. I'm trying to think what else I wanted to explain about this one. I think that's about it. Just remember that type of price action, okay? Remember to use your inside bar indicator. And lastly, I'm just going to show you a little trick. Once you understand and learn the patterns, a really good way to actually draw them is to use this ghost feed. And you want to be able to put these levels in without actually using any tools, right? So you want to be able to, just do this real quick. You want to be able to put in, you want to know where your XA move is, right? You want to know that the price is going to stop in the 1.414, 1.272 extension. I put this pin bar in here for a very good reason because I want to explain something, right? If you get a reversal in here and it is a wick, it's still a valid pattern, meaning it did not close outside of the window. Then you know that you can buy back at 786. And as long as you get a pin bar, right? As long as you get a pin bar against this 786 level, remember, the wick's okay because it means rejection of price, right? And actually, when I see a wick, I almost like to see that better, where it fakes a lot of traders out and you get this beautiful wick right here with a pin bar or a hammer candle close at your actual trigger level. And as soon as you do that, you measure from high to low and you know exactly where your targets are, right? We're always looking for the same type of moves. And once you guys understand, if you really learn patterns and stop trying to trade equities and futures, and you really just learn patterns procedurally and you know them so well that you can see them in every single time frame, doesn't matter what it is, this is where the big money lies, okay? If you can draw these patterns and understand where it is, what I do for my guys is I go through and I draw them the actual patterns and I test them. Like I need to know that do they understand what the patterns are, right? Because patterns turn into other patterns. And once you guys really understand that, you'll see that the market has a way that it breathes. A lot of people that even trade harmonics don't even understand that there's a whole way that the market actually breathes. And then once we see that, we know that once you learn them, you really just have to be very conscious of seeing them and watch the market, and then you just go through and draw them. And I'm going to run out of time here because I only have 20 minutes on this actual feed, and I'm going to show you all the patterns that are in this play, because patterns turn into other patterns, right? And once you understand that, you'll understand there's millions of patterns to trade, and they're in every single time frame. And when you can trade the same exact patterns in a 1 minute time frame that you can trade in a 1 hour time frame and a daily time frame, then you'll understand that the market just moves in a certain way, right? So we have a Cypher turns into a butterfly, turns into a Gartley pattern, turns into a 2618 pattern, and then turns into an even bigger butterfly pattern, right? But until you have somebody that can test and explain this to you and show it to you all day long on every time frame, you'll never be able to learn it. And then it turns into another Gartley pattern, right? And once you understand the market really moves like this, and I can go through and show you a million ways that